Yeah, great. We're gonna be talking any further on decentralized finance, also called open finance, after this very, very inspiring talk by Piers from Radix. The term DeFi was first coined in the course of 2018 by blockchain developers and entrepreneurs building new applications and new protocols for services towards new consumers. Coming 30 minutes, we'll be discussing everything DeFi with three amazing panelists, one based in Amsterdam, one based in London, and one based in New York currently. Let me intro them first. First one is Floris van Lieshout. What we would call a crypto OG, has been exploring and researching crypto and Bitcoin since 2011. But he got pulled too hard by the corporate life. Currently works for Deloitte Risk Advisory, Digital Risk Solutions. He's mainly engaged with the financial services industry, advising banks and other service providers around DeFi, tokenization, custody, CBDC, and consortium formations. Then second, on my bottom left, if I'm saying that correctly, is a serial entrepreneur called Dan Roberts. He is currently the CEO of Nimes. Nimes is building the environment to facilitate the underwriting of global digital asset risk to scale vital protection for the vibrant financial ecosystem. He believes in the power of mature, regulated businesses to bridge the gap between traditional finance and the future of our monetary system. And then last but not least, Ryan Burkham launched Fabric Labs before, leading an engineering team to build DeFi infra for protocols like 0x and Tezos. Currently the CEO and founder of Teller Labs, Teller Finance, a risk assessment loan in DeFi. Teller aims to bridge the gap between traditional finance and decentralized finance. Guys, straight into it. We have seen the talk by Radix, by Piers. He's obviously the great presentation about all the possibilities that DeFi is bringing to the market, being non-custodial, it being open, transparent, composable, and decentralized. For our listeners today, how would you describe DeFi in its simplest form? Let's start with Floris yourself, please.
Thanks, Bahadur, for that great introduction, and thanks for having me here today. In my own words, DeFi, I think Piers actually explained it very well, as it's democratized financial services that are leveling the playing field. Say code-based financial services on a public infrastructure, something like that.
Okay, and Ryan, why do you think DeFi is important? Why should we care? And on a more personal note, why are you building a DeFi yourself currently?
Yeah, hey Boulder, thank you for the fantastic introduction as well. So just from a high level, I think DeFi is a collection of new digital banks that run autonomously without humans. They simply run by code. And as Piers explained, there's a lot of new products that can be built on top that currently needed humans to run them. DeFi is amazing because it immediately globalizes access to these type of financial goods. Anyone around the world with a $20 Android can surf the web with an Ethereum wallet and all of a sudden have access to lending products, trading products, derivatives, synthetic assets, everything that they would have potentially limited to no access to in the traditional centralized financial world, they now have access to with just going to a URL. So it really is an amazing opportunity to lower the barrier of entry for the world at large to enter the financial playing field. And while Piers did mention the large gas costs that it sometimes can have on Ethereum, the reality is interacting with DeFi applications is a lot cheaper than the traditional financial world for those who don't have that much capital at hand. So it really is in the mainstay democratizing access to capital. And I think from a personal note, the thing that's amazing about DeFi is this concept of composability. The idea that you can take from one bank, one digital or decentralized bank, and integrate it into your bank. This has really opened the door for collaboration and really the desire for partnerships within many people in DeFi, which I think drew me initially into the space. And for us, really what we see as the big thing with DeFi is bridging this gap between where people are currently getting value from the centralized world and offering products that really have immediate value capture for users who are not in DeFi today. We see this ability to truly transform the world of what is risk assessment in the traditional financial sense and offer products that use risk assessment in the DeFi world.
Thank you, Ryan. Dan, on your personal motivation to be building a DeFi today, I would also love to hear your voice here.
Sure. Yeah. Thank you for having me on. Personally, the energy that you get in the community is something that we will start seeing people joining and beginning their careers in this space purely because of that fact. I mean, sort of someone who would have gone to work at a large bank 20 years ago, who's joining the workplace, is now joining Maker or Teller or Radix instead, and so that sort of becomes a generational force to bring in these kinds of minds into the space. And then, specifically speaking about the insurance sector, insurance has been trying to digitize for the past 20 years, maybe a little longer. And insurtech as an individual term has really only bridged off from fintech in the past 3 or 4 years. You've started seeing all these incredible applications across claims management and capital allocation and so forth. And it really seems like DeFi is way out at the front, building these sort of futuristic products and services, which comes with its inherent risks, but that poses a opportunity for, again, specifically to insurance, this sort of binding, immutable contract of insurance that doesn't require the lengthy, legal, fragmented process to provide trust to these kinds of interactions. So going beyond insurance, which is our area, and I guess going back to the question of sort of what is DeFi, which is pretty much being covered very well by everyone else at this point, is really you take the rules and the trust that a sort of central institution provides to a financial interaction, and you just put that on transparent code. Those rules are available to be viewed by anyone, and that means that, well, what it doesn't mean is that every central institution is this inherent evil company out to steal everyone's money. But what it probably means is that actually the rules of these financial products and interactions are relatively straightforward. It's not to say that there's not a lot of work that needs to be done. There's a number of complex areas in this, but once you can define those rules very efficiently, then there is no need for that central institution to provide that trust, and you're left with a transparent, open environment for users to interact with each other directly and with these financial products directly. So yeah, personally, it's just a wonderful space to be working in. The kind of energy that we've got on this panel is sort of a regular occurrence.
Thank you, Dan. And indeed, we hear that and see that more and more, that people are extremely enthusiastic about building in the space and then building in DeFi specifically. We've touched upon indeed the basics of DeFi. Floris, to yourself, you chatting with many banks and financial institutions, you know their issues, you know what the issues they're seeing, and we're trying to solve these issues with DeFi. What are the key issues, in your opinion, that DeFi is trying to solve? And secondly, would you see DeFi more coming towards banks, or would you see financial institutions more coming towards DeFi in the near future?
Yeah, that's a fascinating question. First of all, having been in DeFi for a little while now, or I think 2015 was when I got into touch with the first DeFi protocols. It's really fascinating to see that it is growing from just white papers and just theoretical startups to actual usable products that bring end users value. And I think that's one of the more fascinating things. And first, it was a very small community of people who were very much into crypto, who were fascinated or almost obsessed with this technology. And I think halfway through this year is at least when we started seeing more interest from financial institutions. That we saw banks taking notice and asking us to come and have a talk about DeFi, and where we started thinking about, okay, what type of value would DeFi bring to our institutional clients? So the value or the problem that DeFi is solving, if you take away everything and just look at it from an end user perspective, I think it's been said a couple of times now, it's democratizing access to financial services. Right? It's really making it easier for basically just anybody with a smartphone or an internet connection to use rather sophisticated financial instruments. And I think it's also been mentioned that the value as an end user, if you have any crypto assets, you can quite easily use them to have an upside, right? And I think from an institutional perspective, the interest is there. Well, if you look at banks, I think it will take a while before they really touch it, right? They're just exploring it now, taking a look at it, trying to understand what it is, where the value is, and how they might potentially be able to leverage it. But I mean, regulatory-wise, it's still pretty unclear for them what the way is that they can offer these products and services to their clients. But perhaps in the end, there would be a way to leverage these services in a way that Coinbase is already doing. Right? Coinbase is offering their users 2% interest on just holding a stable coin on their platform. That's about 2% more, or even more than you get at a regular bank account, specifically now that there's a negative interest, right? So, yeah, I hope that somewhat answers your question, Balder.
Yeah, and then I would like to add on that. Today we're seeing in DeFi mainly crypto assets being used as collateral. What's your expectation for, let's say, more real-life assets like invoice financing or other financing tools to be switched over to more DeFi native protocols?
Yeah, super interesting question. I think a great example here is a project that Coca-Cola North America is doing with Baseline, Unibright, and Provide. Baseline is a way to use the Ethereum mainnet to synchronize various ERPs. Not going to dive into that too much, but one of the things within the context of that pilot that they are researching is invoice factoring, right? Which is reselling your invoice before the other party that has to pay the invoice has actually paid it. And within this project, they are actually tokenizing these invoices and trying to take a look at how to leverage that within DeFi. Right? So imagine that I'm sending you an invoice, you have to pay it within 30 days, but there's this other party that thinks, you know what, I'll just pay Floris 99% of the invoice because I think ultimately Balder will pay that invoice. And now Floris already has 99%, so he's liquid again. And I make an easy 1% within 30 days. Enabling this type of technology through DeFi, I think, is fascinating because it just opens up the market for a lot of other players to take advantage of this type of opportunity. Yeah.
Great, thank you. Ryan, also to yourself, if we see how blockchain has developed over the years, it's been a very strong, let's say, grassroots movement. Now we're getting into a place where we're seeing this grassroots movement building all these DeFi native protocols and these partnerships and building together this very strong movement. And now we're seeing real world life applications. How do you, CEO of Telefinance, build that ecosystem around you, getting people to build on Telefinance and making sure you're going to be important and making your flag, standing your flag into the DeFi ecosystem?
Definitely. I think that's a question every DeFi protocol is asking themselves and asking their community as well. So I think the key point to recognize about DeFi and finance is we are creating new economies. We're creating two-sided marketplaces where you need both sides to actually bootstrap a new network. And it's similar to the early 2000s when the social media platforms came out, something like Facebook, like MySpace. Every user was also a creator and a viewer. So in DeFi, a lot of users share the act of being both a lender and a borrower. And that's not only from the lending standpoint, that's both from supplying capital to using capital. That can be something from Compound, where you're actually lending and other people are borrowing, or Uniswap, where you're supplying liquidity into a trading environment and other people are trading that liquidity. So in order to create a DeFi network that really grows, we like to look at something that Facebook kind of initially came out with, something called flywheel effect, where with Facebook, every user that joined the system actually multiplied the network effect of Facebook by n squared, n being the number of users. So you can see as more users join the network, it becomes exponentially more valuable to every user within the network. And that's how we like to see crypto networks and DeFi networks specifically. I think we've seen this meteoric rise in DeFi because of the network effect and this flywheel of making money on your money in ways that are not nearly anywhere accessible in the traditional world, especially as Forrest mentioned, with the bank account earning you 0 to negative interest. So with Teller specifically, a lot of our focus is bootstrapping that network and bootstrapping that community, where we need to solve first, of course, the supply side, bootstrapping total value locked and AUM, because that allows access to loans backed by data, backed by credit, and access to that capital, because then we are able to solve the other side of the market, which is the borrowing side and the ability for offering value to consumers that want to access capital for specific use cases. And then for every protocol, we kind of see this ratchet effect, where as more AUM is entering the system, borrowers have more access to different types of activities in DeFi that they want to borrow for, more borrowing activity happens, and then more people want to deposit AUM. And this is without even going into some of the incentives that have been rolled out over the past 6 months, where actual projects have given off what we call governance tokens or rights to ownership of a protocol that have actually significantly incentivized the first part of that model, which is bootstrapping and fostering the initial AUM, or total value locked, the supply side of the network. So with Teller, and I think with all other DeFi projects, it's this really interesting mechanism design, which just is a combination of creating a new economy plus building a token network and into it and delivering value to the end consumer that you want to bootstrap, and making sure that you're not simply bootstrapping something that is here in the moment, something here for DeFi, but it is a full-fledged product and protocol that can act as a financial primitive for the next 10 to 20 years. And this is the same way that we saw internet protocols being developed, something like HTTPS or Apache, something that will withstand the test of time and be a primitive that anyone else can build on top of.
Great examples there around the flywheel effect. Really enjoyed those. I would like to also ask yourself, you're building a solution which wants to cross over traditional finance to decentralized finance or open finance for that matter. How would you say what's the view of the sort of more US ecosystem on what you're building today from the traditional finance side?
So from the traditional finance side, they're definitely experimenting with it. As Flores mentioned, banks are looking into it. But I think there's two different types of value propositions that DeFi can offer different types of financial institutions. There's the lending side, which is, of course, you stake your capital, you're able to earn exponentially more than what you would be earning today through just the normal lending markets. This has seen some adoption, and institutions and banks are taking notice. The issue kind of keeps coming along, which is what is the compliance risk? What is the actual custodian risk? How do I know that my money is safe, even if it is earning 5% instead of 0.5%? No one has really addressed the other side of the market, which is the access to capital. And what we see is interesting, while asking an institution to offer AUM and offer capital, there are inherent risks to that. The opposite side really does lower the barrier of entry, where you're asking an institution, say, hey, here's another line of capital. And the way we perceive adoption of DeFi into traditional finance and fintech institutions is through that effect, by saying DeFi is another money rail. So instead of you having to either A, acquire a bank like a peer-to-peer company like Lending Club had to do, or B, source capital from a bank, like other fintech institutions have to do today. Here's another access to capital. Here's another money rail, which is DeFi. And all of a sudden, these financial institutions, by plugging into this, can create products that they create today, risk assessed, plugging in data from the real world, building a top of Teller, that they can actually source liquidity from the DeFi market through Teller and integrating directly into their own platforms. So someone like Robinhood, for example, could offer a new type of leverage trading product to their consumers. And what's interesting is the capital for that could be sourced directly from DeFi users that understand how and where their money is actually going. So it really just broadens the access to capital for these fintech institutions and significantly lowers the barrier of entry for them to offer new financial products. Of course, this comes with a world of compliance, and every financial institution is going to have to check these boxes of compliance before they're really able to fully process and operate and offer these types of DeFi-based risk-assessed products to their consumers.
Perfect. We happily see them coming towards the DeFi industry. Although DeFi has seen a lot of positive developments over the especially the last 2 years, we've also seen some what we call in the industry rug pulls, where people are issuing new contracts and the money is gone. But at the same time, we've also noticed that the industry has quite a good sense of being self-regulatory. So Dan, to yourself, you are working on the risk side of things. What would you say are the main risks for DeFi today, and how is the industry handling those?
Yeah, so there's a whole process in thinking about it. One of the good places to start is who's liable for the different risks. It's sort of like the self-driving car, autonomous car question of if a car owns itself, who's liable if there's a fatality from a crash? Is it the manufacturer? Is it the someone who was in the car at the time, the guy behind the non-existent wheel? Is it a company who perhaps owns them? And it's the same in the DeFi space. It's going to be a very interesting question over time to see how DeFi is actually regulated kind of outside in. But you can certainly regulate sort of fringe services. And by them, I mean, names being one of them, a sort of bridge between some of these centralized finance and traditional finance worlds, ours being in insurance, and the sort of internal hub of the DeFi activity. So there's a couple of trends going on. One of the interesting ones being that you're now getting, particularly when we look at insurance, sort of bespoke insurance companies and brokers that are coming out of the woodworks to service this space specifically. And they're regulated as normal underwriters and brokers, and they have the actuary divisions and so forth, skills to assess different types of risk. But do so in a sort of context of serving this space instead of going to a large traditional incumbent underwriter to provide that kind of underwriting expertise, which in most cases would be less efficient than an individual underwriter doing it, sort of coming from the native space. So the different risks, once they start looking at these different pockets of this industry, and particularly when looking at who's liable, where the what sort of niche risks can be covered in small amounts and increased over time. It varies. A common one in the DeFi space is a smart contract cover, so a loss to code not executing as expected. Tech errors and emissions is a sort of akin to that. But really, if we look at sort of digital assets more broadly, it's really just a question of how do you sort of bridge capital to risk, and you leave it down to the brokers to figure out what specific types of cover needs to provide that sort of cover. And there's all sorts of ways that you can mitigate that further. And I think if you look at DeFi, it's very much a space that is pushing ahead with innovation, regardless of not so much regardless of the risks, but there's a spectrum of risk appetite that is happening outside of regulated space, which is sort of the right way to approach it, really. But I think this was alluded to with peers earlier. you have this sort of problem of iterating on a project that then, even if you don't sort of see that being the case, lots and lots of user activity occurs, and you haven't gone through that testing. And that's great to go out early, but at the same time, there should still be these sort of audit processes. You've got a number of sort of very experienced audit firms now that can track these on an ongoing basis, and whenever new code is pushed out onto these protocols, that they should be properly tested, and actually the sort of insurance cover, in whatever form that happens to come behind that, will start to require these kinds of processes in place. It doesn't mean that this sort of rapid innovation can't happen on the front end, but really I think the best thing to come out of this DeFi space are the robust tools that are going to be used over the long term, instead of some of the sort of 5,000% APR sort of projects that we see in the first instance. That they're sort of great gateways into understanding what this space can do, but it's the long sustainable products and services that are going to be used over the long term, and they're the ones that are going to be better understood, well audited, and therefore insurable.
Thanks, great. And following on that, then, I think it's great to see that we're seeing these insurers now coming to the market, starting to learn about these different DeFi native protocols and the risks included. If you would see today, what is the total outstanding amount of cover we're seeing today among these different DeFi protocols in terms of notional value, and what would you expect for the coming 2 to 3 years? It's a big question, maybe, but trying to get your brain here.
I mean, it's relatively low for digital assets as a whole. So when you look at DeFi in particular, and DeFi is probably, well, it is at the front end of this kind of new innovation, least understood. The cover is even lower. It's probably changed over the past 6 months or so, but the whole space, $500 billion plus market for sort of cryptocurrencies market cap is 95-96% uninsured, and that's probably going to be a little higher in the DeFi space as this risk is starting to be understood. So I think there's companies like Nexus Mutual that are doing a fantastic job of providing that initial underwriting capacity to individual users, and doing so in the language that those kinds of users are completely used to. There'll be a challenge to provide increased limits over time through that sort of product, which is what we would really love to support as well. And then over the next 2-3 years, I think the question is really how well can these protocols present themselves as secure sources that have transparent sort of loss histories, and sort of start speaking the language that these underwriters like to speak. And as I mentioned, you have these bespoke underwriters that are focused purely on these pockets of risk within the digital asset space, that are starting to, the sort of language barrier is merging very, very quickly. What's clear, at least on my side, is that specifically around mitigating risks, is that sort of insurance scalability problem will be a collaboration between regulated underwriters, but again, they can be bespoke for the space, not the big grey head underwriters of incumbents. And capital markets that are already native to the space. So it's not as if you can't source the appropriate scalable capital. Insurance can be an asset class, and is a normal asset class in the traditional markets. There's no reason why it can't be an asset class in this space for institutional investors and even retail investors, the sort of long tail. So you sort of have the capital source. It's just that means in the middle of sourcing it into good versus bad risk, and so you still need that kind of regulated pricing mechanism in the middle to make sure that risk isn't ending up in the hands of someone who doesn't understand what the risk is. And not that the DeFi space has shown us that people aren't happy taking on such risk. So yeah, it'll be very interesting to see, and obviously there's a bigger space in the cryptocurrency world outside of DeFi, and very excited to see DeFi become a larger and larger part of what we're trying to do. Bitcoin was a decentralized money. DeFi has created these decentralized financial products and services. It seems a very, very natural evolution that it will continue to go in that direction over time.
I could not agree more with yourself then, and especially, if you want to onboard that next wave of users, either being institutional consumer, then obviously insurance is one of the key items that we need to solve to safeguard deposits or any form of asset or money. Guys, we're getting to the end of the panel today. Obviously, I don't want to leave without sort of getting your visions for the future. So what would you say it's needed to onboard the next, let's say, big cohort of users? I think we're currently at around 20,000 users if we're talking about DeFi as a whole, maybe even a little less. So how we're going to onboard the next wave of users in the DeFi ecosystem? And secondly, what's your expectation for how the total value locked might look down the lines, let's say, end of 2021? The floor is yours.
Yeah, good question. So what does it need to grow, right? I think time and regulatory clarity. MiCA is in the works. I think that will allow a lot of institutions clarity on what is asked for them. But maybe most importantly, we need more users to grow. And I think in the previous section, Piers was asked a question. What do you think it will take for people to play around with this? I think just do it. Just go there and experiment with it and experience how much fun it is to just with a little bit of capital go and play around with a couple of these DeFi apps. It's a whole different world from than it was in 2017 when you still needed quite extensive computer skills, I would say. And today there are so much more easier interfaces. If you just download a plugin for your browser and buy, let's say, 50 or $100 to play around, just go and play around with it and see that it's simple and there's some actual value there for you. And as to what it might look like at the end of 2021, it's always very risky to say stuff like this, but if you look at the growth rate from mid of this year to today, I think we went 15x or something. I think it was mid-June when the total value locked of DeFi hit 1 billion, and today we're pushing up until 15 billion. So in another year, who knows? We might actually hit that 100 billion, or we might pop the bubble and be back somewhere around 10. I have no idea. But it could go either way, really. But overall, I think the sentiment is quite bullish for next year.
Thanks. Yourself, Ryan?
Yeah, coming off what Floris mentioned, I think a lot of this market and getting into it is having capital at stake and just playing around with these applications. It is so much fun when you are using something, and even if you don't fully understand the mechanics, when you have skin in the game, immediately you are incentivized and mentally willing to go read through documentation, understand how it works, because it's real money on the line, even if it's just play money. So that's something that I would totally encourage anyone who's watching this today. I think what's really interesting about the adoption in DeFi is that the products that gain success at any point in time in DeFi are actually those that were built for the users the majority of users who are currently in DeFi at that time. At first, we had applications like MakerDAO that really were built for those more technically or crypto native. Then we had platforms like Compound and Aave where it's simpler. You simply deposit assets into a front-end interface and all of a sudden you're earning interest. And then I think as the adoption and understanding and comfortability of depositing your assets in a smart contract took place, we started seeing these insane yields, these 5,000% yields, which started bringing crypto native people from other areas of crypto into DeFi and seeing it as the next frontier of DeFi. I think we're entering this next wave now of DeFi as platforms are heating up. I think we're seeing more tangible products being released, and even with this concept of fair launch products where potentially there's no VC backing, there's no investors, we're seeing real projects that aren't based on speculative yield, but are based on actual resources that could be used in the long term in DeFi. And I think what's interesting is each point of the adoption curve is critical and necessary, because kind of taking a book out of the way Steve Jobs looked at startups, every layer of technology is just another layer of sand. We're all standing on the shoulders of giants, and DeFi exposes that in an insanely fast and iterative and expanding way, where a lot of projects today are built on the yield or lending earning projects of a year ago, or maybe even just 6 months ago. So every layer of DeFi builds on top of itself to offer new value to the next cohort of individuals that it'll bring in. Of course, from our perspective, we really see the next massive cohort of users coming in from traditional kind of applications that users use today, like something like Robinhood, something like SoFi, applications where these fintech platforms or companies already have hundreds of millions of users, and they could start piloting with these type of DeFi applications and offering just immediate value to their consumers. Something that's really exciting is what Dan brought up. These bespoke insurance companies are kind of coming out of the woodwork because all of a sudden there is interest and in this new financial ecosystem. I think we're going to see the same in 2021 as the crypto market continues to expand, as the DeFi market continues to expand. We see these financial technology firms coming out of the woodwork to integrate different components of DeFi. And in terms of a projection, let's see if we can get to 1 trillion by the end of 2021.
That's a big one, Ryan.
1 trillion in DeFi.
Okay.
Probably crazy prediction, by the way.
Thanks, Ryan. Dan, your last, I do got to say, you got around 40 seconds. I'm having people screaming in my ear. So if you could keep it a little short, thank you, man. Ryan took your time, sorry.
No worries. Yeah, obviously from my side, one of the things that's needed is insurance. There's lots of things that are needed, but I don't just mean any old insurance, and specifically not traditional insurance in that sense, but insurance created and designed specifically for, to serve this space and to get Ryan to his 1 trillion total locked value. And then really the final bit of what it'll look like, my only hope is that, and this seems pretty likely, is that we'll come out of, let's say, this initial sort of significant interest in DeFi with just more robust projects, better processes, better security, better understanding, regardless of where total lock value ends up. It's going to be really interesting to see the emerging sort of winning standards and protocols that people are using over the long term. So very excited for this next year. It's a good time to be involved.
That's a great way to close off this panel. Thank you so much, Dan. Thank you, Ryan. Thank you, Floris. All the three of you for being here today. Ryan, you especially for waking up so early in the US. Great. Thanks for being on this panel. I hope you learned a lot about DeFi. Do follow these three guys. And I'm going to hand it over to Jan from here. Thank you.